Venture capital deals set for worst drop in over 2 decades. This is the only reason woke companies have stayed afloat, is venture capital. They drove away all their customers, so they're not making money by making things people want. No, they've been making money by appealing to venture capital, which is now running out. Though drastic investment contraction has reset global startup scene, US and China have both seen a drought of fresh deal making. Well, yeah, so even the activist investors have to make a profit at some point. Even they're running out of money. They don't have the money to keep funding all this garbage anymore. Though venture capital investments are on track for the sharpest drop in more than 2 decades this year, surpassing the declines of the dot-com crash and the financial crisis amid rising interest rates, macroeconomic uncertainties, and a public market downturn. Yeah, this public market downturn, yeah, that could have been avoided, but so the high value of new venture capital deals globally is, the value of new venture capital deals globally is down 42% in the first 11 months of the year compared to last, to $286 billion, according to research firm Prekin. That's the deepest slump the researchers have recorded yet, surpassing the nadirs of the early 2000s and the 34% collapse after the current year minus 14 financial crisis. It's been that long already, huh? Kind of impressive, actually. Yeah, these investors, these activist investors, kept investing in companies that had no intention of ever being profitable. And now it's biting them in the ass. Yeah, that's why you're seeing so much desperation from companies like BuzzFeed, Vice, Vox, all of them, because they don't make enough money to sustain themselves. If investors stop coming in and throwing more money at them, they're going to go out of business. And now we're seeing a hilarious situation where in the past, they had a paying customer base, like how I talked about before, how like with the anime conventions, they had people like me that saved up money to go spend at those conventions, and they decided they'd stop appealing to me to get like 10 broke teenagers in my place. And oh yeah, they succeeded spectacularly raising their numbers. Didn't help them financially though. So now all of these companies that they've been appealing to investors primarily, they drove away their paying customers. Now the investors are pulling out. They have no paying customers to fall back on. I really look forward to seeing all these corpos who went full woke try to backtrack now to try to get us to come back and give them money again. And I'm just going to say it now. I am never going back to any of these companies that stabbed me in the back, because I already know, like, the mask is off. I know what they really think of me. I'm done giving money to people who hate me. But there is one way they could get me back. Just one. If someone were to come in and do to these companies what Musk did to Twitter, and like get rid of like 80% of their staff, like do a complete purge of all the woke employees, and then make a commitment to like against wokeness and censorship. Now that's a necessity, by the way. If any of these fuckers ever want my support again, they have to put it in their company policy that they stand against wokeness and censorship. If they can't promise to that, if they can't commit to that, I can't give them my money. Venture capitalists who ratcheted up spending over the last decade are pulling back after rising interest rates put a premium on capital and challenge the tech industry's growth at all costs mindset. Yeah, you got the growth never lasts forever, unless it's the universe as a whole, maybe. Yeah, deal activity dropped sharply in the two biggest venture markets, with declines in the aggregate deal value of 50% in China, 45% in the US so far this year. So far. The tides are changing, said Evan Thorpe, principal at 630 Ventures, a U.S. firm that invests globally in early-stage startups. We're seeing a big come down from the peaks of last year. Yeah, it's called reality. It's catching up to you. So several of the biggest startup backers have retreated after high-profile troubles at their portfolio companies. Sequoia Capital, one of the giants of Silicon Valley, plunged into crypto this year with a new $600 million fund, only to see the effort backfire with the blowup of the FTX exchange. Oh yeah, your money was laundered to the Democratic Party, so you just go to sleep well, knowing you contributed to the party you already support anyway. The firm wrote off the full value of its investment in FTX, as did SoftBank Group Corp, and Tiger Management, Tiger Global Management, two of the most aggressive supporters of the new technology in recent years. Now, what I find funny is companies that are still moving forward with crypto projects, even as crypto is falling out of favor. Man, imagine being stuck on one of those. So another factor is a mismatch in expectations. Venture firms are unwilling to invest at the lofty valuations of years past after a correction in public markets, while many founders are holding out for better terms. Oh, yeah. Oh, man, this is hilarious. Now, this sort of thing happens with home prices all the time, right? So, like, say you had a massive spike in home prices and someone bought a house for $400,000, and then the housing market crashed. So now the house is only worth 200,000. No one's going to buy it for any more than 200,000, but the person that paid 400,000 for it isn't willing to sell it for any less than 400,000. So the market just kind of stagnates. Like, those who own the property are not willing to sell it unless they're forced into it. And those who want to buy it can't find anything because everyone is sitting waiting for the prices to go back up. So there's a price gap between buyers and sellers. Yang Guo, principal at global alternatives investor LGT Capital Partners, said in a recent panel, many private companies are still held at current year -1 valuations, while public comparables have corrected significantly this year. As a result, buyers would require a steeper discount, but many sellers are not ready to embrace this reality. Well, they could continue holding onto the sack until it falls, because we saw what happened in Detroit, right? Yeah, there's a lot of people that they could have sold their home and left Detroit and only taken like a 50% loss. But no. It's the market goes up and down, guys. It's going to recover. It's going to recover. I'm in it for the long haul. Now they can't sell their house for $1. Good luck, I guess. So the U.S. has tried to tame rising inflation through a series of interest rate hikes this year that have rapidly cut the easy funding of recent times. Startups around the world are being asked to show clear path to profitability, and that is where wokeness falls, because wokeness has no path to profitability. It's all charity, basically. Like, these activists are willing to fund wokeness as a charity to spread their ideology. Now they're going to actually need to make a profit. They're done, man. They're fucking done. So in many cases, sooner than they had previously planned for. So the market is de-risking overall, said David Chang, founding partner of Hong Kong-based Mindworks Capital. As investment in volatile sectors like crypto and blank check companies has dried up, limited partners at venture capital outlets are looking for surer bets. Most LP and capital are on the sideline and waiting for signals for any correction. Now, the smart companies are going to try to find a way to be profitable without venture capital, though, because once investors are involved, they own the company at that point. China's venture landscape has been disrupted by multi-year regulatory crackdown on the tech sector and severe lockdown measures to limit the spread of Corona. That's the excuse they gave anyway. No, it's all power and control. Abrupt restrictions on movement in and out around big cities have hampered regular economic activity and the business across industries in the country. China-focused fundraising dropped by 81% this year, according to Prekin. Yeah, no one wants to invest in that volatile of an environment. Venture capitalists tend to be optimistic about the long term, however. Well, yeah, once the woke cancer is purged, long term, we can go back to making good shit again. This downturn is sure to be temporary and may end up benefiting the tech ecosystem by ushering in more realistic expectations, said Edith Young, partner at Race Capital. And I don't disagree with this. This is definitely what she's saying here. That's true. That's true. So a lot of these woke companies are going to disappear and new ones won't rise to replace them because investors are actually going to want a chance to get their fucking money back. The worst time could be the best time to invest in tech. She said, I'm bullish on overall early stage tech startups and technology advancements. Okay, that's her plan. Buy the dip. Oh, it's going to go up again, guys. Uh-huh. We'll see. I mean, as long as this destroys wokeness, I'm fine. I'm fine with this. Bring it on, I say. Because as I've been learning, the more I look into this, the more people I talk to who got stuck in these deals. Venture capital, it's like taking your company public. It sounds good at first. Like, I'm basically just going to get a shitload of money. Okay. And then no one ever considers the strings that money has attached to it until it's too late anyway. And then they cry. Like, look at what happened with George Lucas, too. And I know it's a completely different situation because he actually sold out, like literally, he sold his IP. Yeah, he sold his IP to Disney and then he bitched about what Disney was doing with it. If you still cared about it, you shouldn't have sold it, dumbass. It's not like George Lucas was hurting for money. I have zero sympathy for that moron. But that's the kind of mindset that happens with these companies, like either when going public or seeking private investment via venture capital. All they see is, oh, I'm just going to get millions of dollars of basically free money to go do my work. And then these investors then knock on the door and say, hey, you're going to have to make some changes around here. No, this is my company. Yeah, the board just voted to remove you from the company. We're going to, if you're not going to play ball with us, we're going to install someone who will. That's happened to so many people. Like that even happened to Steve Jobs, remember? He got kicked out of his own company because he took it public. They let him stay as long as they were willing to work together. And then the board of directors just decided, this Steve Jobs guy is more of a liability than we'd want. Yeah, let's just get rid of him. That's what happens, man. Yeah, Papa John's as well. If you take your company public, as soon as investors get involved, they own it now. They're the ones funding it. They own it. If anything, this should be a last resort. Like if you're facing bankruptcy and the only possible way you can still make your dream come true is if with investor money, okay, fine. Maybe then.